Are you feeling stuck right now in your trading? If so, I've got a game-changing approach that's going to help you turn those trading losses into trading wins. So we're going to start off by looking at the SPY, and I want to alert your attention to right here. So you can see, number one, that we were in a beautiful squeeze. So now we're going to look down here at the bottom. So this first signal is, you see these dots. So there's three different time frames happening in this indicator. The green is the intermediate, we have the short-term momentum, and the micro. So when the short-term momentum and the micro momentum are both in this lower zone at the same time, it's going to generate that dot. That's an intermediate confirmation signal. It's one of my favorite signals. Now, this signal will occur on the other one, but it won't print the dots. Okay, the dots are there. Now, when you get this intermediate confirmation signal inside the squeeze, so we got the intermediate confirmation, so that's telling us that the short-term momentum and the micro momentum are in the oversold area at the same time while we're in a squeeze, and then stacked moving averages. So I want you to learn, the blue is the 8 exponential, the red is the 21 exponential, and the 34 is, well, the pink is the 34 exponential. So it's stacked moving averages, 1. In a squeeze, 2. And you're getting an intermediate confirmation signal while you're in the squeeze with stacked moving averages. And you can see that squeeze fired and rocket shipped to the upside, right? Does that make sense? When you're in a squeeze, and you get a bullish divergence. Okay, so let me point it out. Now, on this blue line, the short-term momentum, you can see that it's going up while price is going down. Now, on the market forecast, it's not going to print this line. You got to draw it manually. But with this indicator, it's going to plot the bullish divergence. And it's a bullish divergence because you can see the green dot. So when I look down here, I see, all right, there's a bullish divergence in the squeeze. So like right here, I got a bullish divergence, but it wasn't in a squeeze. So number one, you're looking for a nice, beautiful squeeze, building up of energy. You want to see that bullish divergence. Plus, if you have the upper study set, it also will draw it on the upper study set. Here's the third component. This is where a lot of people get faked out too. So this doesn't have stacked moving averages at the time. So what you're going to be looking for is, again, you're trying to take advantage of everybody else getting stopped out, utilizing their liquidity. Don't you see how that's important, right? They get stopped out. For every buyer, there's a seller. For every seller, there's a buyer. So can you see how if you're able to spot what they're doing, you can do the opposite? So in this particular case, the blue crossed the pink. So the 8 exponential moving average crossed the 34 exponential moving average. What does that mean? That means that everybody who got in this squeeze, they're getting stopped out, because that's one of the indicators, right? You're taught that, hey, when it closes below 34, the 8 crosses, get out. They're getting stopped out. But in your case, you're in a squeeze, you've got the bullish divergence, and the 8 crossed the 34 to the downside. That's the time to get in the trade, and boom, you know that the downward momentum is ending, so you can jump in and you can buy their fear and rocket ship to the upside. All right, so here's number 3, EEM, the emerging markets. Now, this one starts off with a black squeeze. So the black squeeze is the low compression squeeze. For those of you that trade the squeeze, you know there's 3 compressions: high compression, mid compression, low compression. And they all mean something. But this strategy starts with the black squeeze. Then the next piece of the puzzle is you're going to have stacked moving averages to the downside. So in this case, you want the pink above the red and the red above the blue. So in this case, it's the 34 above the 21 and the 21 above the 8. Now, the last piece of this is the bearish divergence on the Forecast Pro. This indicator prints the line and gives you the red dot. So the way it works is when the blue goes in the upper zone and comes out, and then it hooks back up and goes down, you can see that those highs are getting lower in the indicator. The highs in the price are getting higher. So when the highs are getting higher in price and the lows are getting lower in the indicator, it's called a bearish divergence. Now, with this indicator that I had coded, it actually plots the signal and the dot. If you have the upper study set, it plots it as well. So let me recap on this third one. It's a black squeeze followed by stack moving averages to the downside and a bearish divergence on the Forecast Pro or the market forecast. Okay, does that make sense? Let me give you a bonus one right now. Okay, what we're looking for is this bullish cluster. It's the first component. Now, you're going to see that dot right there. Let me tell you really quickly what this dot is representing. So the green line is the intermediate momentum, the blue line is the short-term momentum, and the orange is the micro momentum. So when all three of those time frames close in the lower zone at the same time, that represents a bullish cluster. All three time zones are oversold. Now, we're in a downtrend. So it starts with stacked moving averages to the downside. You've got a bullish cluster. Now, here's the kicker. It's the first squeeze that follows that bullish cluster after the downtrend. That first squeeze. Now, if you see, you started to go on a squeeze, it went up, it came back, it hit the support, and then it rocket shipped to the upside. So let me recap this one. This one's more of a reversal. So you're looking for that nice bullish cluster that's telling us the downward trend could be ending. Then you have that stack moving averages. So again, it's going down. Everybody's short. You get the cluster. That's a heads up. That's not an immediate entry. Followed into that nice, beautiful squeeze. And then you mark that low. That's where you can start position size, and it went up, gave you another opportunity to add. And if that one works out, that one can be a monster. All right, so that was a bonus one. So remember, if you're feeling stuck right now in your trading journey, I want you to focus on exactly what I share with you in this video. Look for those stack moving averages to the downside as well as upside, depending on the direction and your bias. Make sure you find that cluster on that Forecast Pro and those divergences. And then more importantly, make sure you have the squeeze on the stock. That moment in time where it's building up energy is letting us know it's setting up for its next big move. We just don't know which direction that move is going to go. So all of those pieces that I share with you in this video lesson, if you do that, it's going to change the game and you're going to turn those trading losses into trading wins. All right, if you're interested in the TTM Squeeze Pro or my TTM Squeeze Masterclass, I'm giving away that Masterclass free this month along with that Market Forecast Pro. Information is down below in the description. Hey, don't forget to hit the like and subscribe button on your way out. Hit that little bell to get notified when I shoot a brand new video related to trading. And if this video is helpful, make sure you watch this one right here. I know that's going to help you.